Hello and welcome to back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And there is a sudden fall in the markets despite what we saw that the major part of the day was quite flat and range bound. Right now, Nifty is down by about 77 points below that 25,900 levels where we stuck to for majority part of the day. And Sensex has also slid by over 300 points as of now. So yes, while we did see that for majority part of the day we were quite range bound, flat with a negative bias, but right now we have slipped moreover as of now. Of course, it's the Nifty monthly expiry day, so some volatile swings have been exhibited in the markets, and of course that doesn't come as a big surprise also from where we started off in today's trading session as well. But yes, some of the sectoral indices that have been defying the weak market trend. That includes the likes of your Bank Nifty index, which continues to see flat to a positive bias as of now. But yes, it is off its day's high level as well. On the other hand, metal index is also showcasing gains of about 0.5%. On the other hand, PSU banks have been leading the charge from the banking front. 1% gains coming in from the PSU banking pack as well. Realty index also, which has been seeing 5 consecutive day of losses, has seen a little bit of a pullback and reprieve in today's trading session. 1% gains coming in for the Nifty Realty pack as well. But yes, of course, even if you look at the Nifty Infrastructure pack, that has also done well in today's trading session, given that the center also notified some 4 new labor codes that will replace the 29 laws and expand basic social security and minimum wage guarantees across the labor landscape. So that is where you can see some of the positive movement coming in from the infrastructure and realty space as well. But yes, what did not do well in this market, that you can see your IT index sulking in the trade, 0.5% cut coming in from there. Yesterday we did see that the IT stocks had defied the market trend, but today we are seeing that some profit booking and selling pressure has been gripped from the IT and technology pack as well. Media stocks also seems to be not doing well. On the other hand, if you look at the Nifty Auto Index, is also showcasing a loss of about 0.2%. But yes, for the November series, definitely both the headline indices have been quite flattish. And when it comes to the sectoral indices, it has been your realty and defense, some of the sectors which has been one of the top drags for the November series as well. But yes, to understand the last minutes of the trade and how you should be positioned going ahead, I'll go across to Osho Krishan, a senior analyst, technical and derivative research at Angel One, who is joining us to understand, how the trade set up and of course how the trade sentiment is looking like for just the half an hour of the trade right now. Osho, good afternoon. I mean, for the majority part of the day, we were stuck in a range, but right now it's a sudden fall. Looks like for the Nifty, slipped below that 25,900 level. So what can we watch out for the upcoming series, and how has this series panned out for both the headline indices?
Very good afternoon, Lovisha. Firstly, thank you for inviting me on the show. Well, yes, no doubt we have seen very consecutive rejections in the benchmark index around the zone of 26,000 to 26,150 odd levels on the higher end. And from there onwards, there has been some consecutive sell-offs also. And today being the expiry day, there is strong volatility, which was even expected. And around the last penultimate hour of 2:30 towards 3:30, we were expecting such kind of correction or such kind of volatility to come into the picture. But overall, the trend remains on the positive front. On the lower end, again, 25,800 to 750 is the positional support for benchmark index. And till the time it is sustaining above the bullish gap on the daily time frame chart, I am having a kind of a bullish view only on the benchmark index. But no doubt, from looking at the recent developments in the benchmark index, there can be some kind of corrective phase continuation or sideways momentum that can be seen in the coming couple of trading sessions. So I'm expecting 25,750 to be a positional support for the benchmark index, while on the higher end, 26,100 to 26,250 remains a very crucial hurdle. So it is expected to hover within the range. Buy should be argued well and should be augmented for buying opportunity around the zone of 25,800 to 750 zone. On the higher end, 26,000 to 26,100 should be seen as an selling opportunity or lighten up buying position on the higher end. So overall, this is the approach for the benchmark index. While for the banking index, I'm having a quite sideways or pessimistic approach, a bit sideways or pessimistic approach. Why? Because The PSU index has already seen a very strong movement, and now the private sector banks have also contributed to the rally. So some kind of breather or profit booking can be seen in the banking index. Although on the lower end, 58,200 to 58,000 is the positional support, and on the higher end, I'm expecting 59,200 to 59,400 to be seen as positional resistance. Overall views should be buy on the dips around 58,000, and 59,400 should be the position where one should lighten up buying position in banking index also.
Okay, okay. Osho, from the PSU banks, they are one of the top performers when it comes to the November series. But any particular individual movers that you like from the PSU basket?
From PSU, majority of the counters have already seen a very strong momentum in the recent period, although SBI is still looking very positive on the technical chart, and I am expecting that now it should test the four-digit number in the coming period. So 1,000 will be the immediate target for SBI in a very short-term time span, while on the lower end, it is having a very strong support zone of 970. So overall, the positional setup is still very robust, though the technical parameters are already on the overheated or overstretched parameters. So no doubt the risk reward is quite not favorable for fresh buying, but those who are already holding the position should stay invested. I am expecting 1,000 to 1,010 to be seen as the next potential target for SBI. And apart from SBI, even PNB is looking very positive. I am expecting that there can be momentum movement in PNB also. 127 to 128 will be the first positional target, and if it breaches the zone of 128, then we can see a continuation towards 134 from a positional point of view.
Okay, okay, all right. Osho, let's now talk also about IT stocks. They've seen quite a decent traction this month itself. So, can we expect the gains to continue? And how are you positioned towards the large cap IT names as of now?
Overall, I'm having quite optimistic view on the IT space because it has been seen that in the past 2 to 3 months, the counter has already seen a kind of a strong support base for itself, forming a support base for itself. So in the recent period, in the past 2 weeks, there has some traction in the heavyweight IT names like Infosys, Tech Mahindra, HCL Tech. All these counter have seen some kind of strong traction from the lower zone. So I'm expecting the momentum should be seen there and should be continued in the coming period. Tech Mahindra will be the first and preferred pick from the IT heavyweight counters. I am expecting that in the coming period, Tech Mahindra can retest the zone of 1550 to 1560 on the positional view, while on the lower end, as it has given a breakout from the zone of 1450 odd level, so that should be seen as a stop loss for short-term traders, while 1550 to 60 should be the target that one can expect in Tech.
Okay, all right. That is the view coming in from the IT pack. But let's also discuss about the broader end of the markets. The small caps have seen a large decline for this November series. So, what are you making of this sentiment, and what would you be your advice to investors who are approaching it? Of course, today the broad end of the markets have outperforming, but for the November series, small caps particularly have seen quite a bit of a decline.
Yes, looking at the recent developments, when the key indices or the benchmark indices are hovering in a kind of a sideways to consolidation phase, the mid cap and small caps have seen some kind of a strong correction from the higher levels. So I'm expecting that that might be seen in the coming period, that might be continued in the coming period or in the near future, because overall there has been very strong momentum in the mid cap and small cap companies, and there can be some kind of profit booking at the higher levels. Although the undertone and the primary trend remains robust, so dip should be augured well for the mid cap and small cap indices. And overall, I'm expecting that in the coming 1 to 2 trading sessions, or maybe in the week, there might be some kind of correction in the counters. But from the upcoming month, upcoming week, we can see a decisive upsurge continuing in the broader markets.
Okay, decisive approach could continue from the broad end of the markets. Osho, apart from IT, Nifty Realty, they have fared well today, but they've been one of the top drags for the November series. So, what can we expect from the upcoming December series for the Realty Index? And what are the next moves that we can watch out from the sector as well?
Majorly, the reality space, no doubt, have seen a decent traction, and after that, it has undergone towards some kind of profit booking or corrective phase in the short term period. But overall, I am expecting that from a medium term point of view, we still have potential to be seen in the reality space. So I'm quite again optimistic on the real estate also, because majority of the counters have seen some kind of a strong base formation for themselves. Although on the higher end, there is some kind of rejection in majority of the counters. Like Godrej Properties has seen a very decisive upsurge, but again, after a decent movement, it has again undergone into a corrective phase. But now it is at a very strong support level. So I'm expecting that in the short to medium term point of view, one can look for buying opportunity. Again, I'm expecting for Godrej Properties specifically on the higher end, 2250 to 2300 is the immediate target that one can expect in the counter, and a breakthrough above 2300 can provide a strong counter trend in the coming period also. So one can look for buying opportunity in Godrej Properties. On the lower end, it is having a very strong and historical support of nearly 1950. So that should be seen as a stop loss. On the higher end, 2300 will be the first target that one can expect.
Okay, all right. Godrej Properties, one stock to watch out from the realty space. Let's also talk about some of the individual movers today. We'll talk about the big boy, Reliance Industries, first today. The stock did well. It's off its day's high level, but of course, there was a good brokerage note that came in for the counter, and that's what cheered the stock as well. Well, JP Morgan, they have shared a positive note on the counter. The brokerage maintained its overweight rating on the counter and even marginally raised its target price as well. What they've said is they've said that Reliance Industries have risen by about 27% in so far this year, and they've outperformed Nifty 50's 17% increase as well. So despite this outperformance, the brokerage believes that the valuations of Reliance in comparison to peers like Avenue Supermarts within the retail segment or even Bharti Airtel within the telecom segment is quite attractive. And they also believe that the earnings drag that the stock has witnessed due to the weak refining and petrochemicals throughout the financial year of 2024 and 25 is now over, and for going forward, earnings growth should be quite better from here on. But Osho, from a technical perspective, Reliance Industries, how would you view the counter? I mean, so far this year, the stock has done quite well.
Yes, looking at the recent development, the counter has seen a very strong momentum from the zone of nearly 1400 towards now hovering around 1550 odd levels. But on a broader term time frame, it is having a very strong bearish gap around the same levels. 1550 to 1555 is a very strong hurdle for the counter. Overall, no doubt the counter have regained some kind of a strong momentum and regained some strength from the lower end. But I'm expecting the hurdle of 1555 to 1560 will be very crucial hurdle, and one should wait for a breakthrough above this. Then only we can see some kind of continued momentum. While if any dip comes towards the zone of 1480, that should act very strongly for the buyers, and one should definitely try to accumulate positions on any kind of dip towards the zone of 1480. On the higher end, again, 1555 will be the first target. And if there will be any breakthrough or continued momentum above 1555, then from here onwards, we can see another 200 points of rally, but that from medium to long term perspective.
Okay, okay. Let's also talk about Astral, another stock in focus. The stock has been sideways, but we did see JP Morgan has shared a note where it has preferred Astral over Supreme Industries in the pipe sector. What they've said is that since November 12, the shares of Astral and Supreme Industries have corrected about 9 to 11% due to some negative developments around the input prices. But now they believe, and of course they believe that the weak input prices are linked to the supply glut, weak demand, which has led to the price declines and inventory losses as well. But they believe that the firm will be good going ahead on the back of sustained market share gains and industry demand recovering in the second half of the fiscal year. Osho, Astral, it has been an underperformer so far this year, but for the near term, do you expect the trend to reverse?
So in the past 5 months, the counter has been into a kind of a consolidation phase, because the kind of correction we have witnessed from the zone of 2400 towards 1300 subzone, it was very drastic in nature. And after that, there had been some kind of consolidation around the levels of 1400 to 1450. So overall, this is the first phase of a base formation for the counter, and I am expecting that once it surpasses the recent high of nearly 1550, 1560 odd levels, then from here onwards, we can see some kind of counter trend in the coming period, and one can again expect a target of nearly 1880 to 1900 from short to medium term perspective. So this is the zone where one should try to start accumulating position in the counter. I am expecting that the counter has already seen a decent consolidation of 5 to 6 months. So from here onwards, we can expect a decent movement on the higher end also. So one can start accumulating at current levels. 1560 will be the first target, followed by nearly 1900 from medium term point of view.
Okay. Okay, all right. Let's move on and talk about another stock in focus, that is your Yatra Online. The stock did fall today after the company appointed Siddharth Gupta as its new CEO with immediate effect. And the development does come after Yatra's co-founder and previous CEO, Dhruv Shringi, has resigned with immediate effect. But Shringi will be elevated to the post of executive chairman of the board as well. And the stock has seen a decent recovery from its days low level. Right now, it's commanding a gain of about 0.5% itself. Osho, of course, we did see a sentimental reaction, but the stock has seen a good breakout recently. So, what do you make of the near-term trends?
Overall, on the technical front, the counter is looking very positive because it has retested the breakout zone and again is gaining some kind of traction. But no doubt there might be some kind of volatility because of the news. Overall trend remains on the positive front. On the lower levels, 150 is a very strong and positional support for the counter. So even if the correction further aggravates, then one can look to accumulate position around 150 odd levels. On the higher end, again, this counter has potential to retest the 200 odd levels. So one should stay invested in the counter or can utilize dips to accumulate position in Yatra.
Okay, all right. Let's take another stock in focus. That is your Bharat Electronics. The stock did snap its 3-day losing streak as well after it signed a joint venture cooperation agreement with France-based Safran Electronics and Defense for production of highly agile modular, that is your hammer, smart precision guided air to ground weapon in India itself. And that's why we did see that the stock also did quite well. 1.5% gains coming in for the counter. Osho, but for Bharat Electronics, how does the stock look like to you on charts?
Technically, it is a kind of a very strong bullish reversal formation on the daily time frame chart at current levels in today's trading session. So if it continues to have some kind of momentum in the coming period, I expect 430 to get retested in the counter. So at current levels, looking at the risk reward, it is very much favorable for the buyers. 402 is is stop loss, or one can look for building up position at current levels with 402 as a strong stop loss and support zone, while on the higher end, 430 will be the target from very short-term point of view. One can look for buying opportunity in the counter.
Okay, that's the view coming in for Bharat Electronics. Can be looked as a buying opportunity for the counter. Now, let's take a quick stock of the OMC companies, HPCL, BPCL, and IOC, because we did see Investec downgrade all of these counters because they believe that the market appears to be overlooking a key risk, and that is your they believe that the profitability of these OMCs is far more sensitive to the marketing margins. And despite the crude oil prices remaining soft, the same diesel cracks that have been aiding refining margins have now pushed the diesel marketing margins into a negative territory, and that's a big risk that the market is yet to price in for majority of these OMCs. Osho, all of these stocks, they have been steady performers this year. Today they are seeing a decline of about 1% itself. But what's the way forward, and how does technically all of these counters look on the charts?
As you mentioned, the counter has already seen a decent move in the recent period, and again, after
Hmm.
the news, there has been some kind of profit booking, or can be said there can be some kind of correction in the counters. But I'm expecting, looking at the overall technical setup on a broader time frame chart, I'm expecting that dip should be augured well for BPCL. Firstly, 345 to 340 is a very strong support levels, and any further correction towards this mentioned zone can be seen as a buying opportunity. For Hind Petro, again, it has given a very strong technical breakout and is again retesting the breakout level. So near about 430 to 425 is a support level for HPCL, and any dips can be used to accumulate position for HPCL also.
Okay, all right. That's the view for OMCs right now. But let's move on and talk about another stock in focus, that is your Zen Technologies. The stock has done well today, given that the company has also received an order which is worth about 108 crore rupees from the Ministry of Defense. The contract is for the supply of simulators, and it is to be executed within a time period of a year horizon as well. Early this month also, the company had secured about 2 orders, which was worth about 289 crore rupees itself. And today also the stock has been holding well. If you look at your screen, it's nearly 1% gain coming in for the counter. But Osho, the stock has been fairly stuck in a lower range, 1400 to 1350. That's where it has been oscillating from the past couple of sessions as well. What would you make of the sentiment, and what's the near-term target looking like for you?
Overall, technical setup is not very much positive. There has been some kind of bleak developments in the counter. It is hovering below the short-term moving average. So I will advise stay sidelines from the counter. until it breaches the zone of 1620 on the higher end. Then only it might see some kind of continuation or momentum in the short term period. Till that time, better to stay sidelines and wait for a kind of a strong recovery in the counter. Then one might look for accumulation or investment purpose from medium term perspective.
Okay, all right. Let's talk about another stock in focus, that is your Tarsons Products. Of course, in the last, after it's 1 o'clock, the stock has seen a decent run up. 13% gains came in for the counter. In fact, despite November being quite a subdued month for this particular counter, right now the stock has seen a decent run up with about 14% jump as of now. Osho, what can we expect from this particular counter? Of course, we have seen a turnaround in the second half of the trading session for Tarsons Products.
No doubt today we have seen very positive momentum in the counter, but overall the technical setup is very weak. The counter is into a very strong correction phase. There has been no respite on the technical chart. So better to stay away from the counter because this is the first or initial step of reversal. If the follow-up continues, then one may look for buying opportunity, but that will be only above the zone of 290. So still the counter has to cover a lot of distance before building up a strong momentum for itself. So stay sideways. Once it moves beyond the zone of 290, then one may look for buying opportunity in the counter.
All right, all right. Plenty of work left to be done for this particular counter. All right, let's move on and talk about AWL Agri Business. That stock also dropped in today's trading session, and it has witnessed the steepest drop in over 2 months itself. Today also it saw about a block trade, around 2.5% equity had changed hands in 2 block trades itself. And last week also we did see Adani Group company had also sold about its remaining 7% stake in the company itself in a block deal. Osho, what's your view on the counter for AWL Agri Business?
The counter is gaining some kind of a strength because it has formed a kind of a higher lows pattern. But on the higher end, the zone of 280 has been consistent hurdle. There has been strong rejections around the zone of 280. So one should wait for a decisive resurgence above the zone of 280 or 285 to be precise. And from there onwards, if it able to have a kind of a decisive breakthrough, then one may look for buying opportunity. Till that time, stay sideways from the counter and until we see a decisive movement on the back of volumes, till that time, it is advisable to stay sidelines from this counter.
Okay, sideways on the counter, advisable for this. All right, let's talk about one particular stock which has seen a positive movement today. That's your Glenmark Pharma. The company did announce the launch of world's first nebulized fixed dose triple therapy for the treatment of COPD as well. And that's why you can see the stock exhibiting gains of about 2% as of now. But yes, Osho, what's your view on the near-term trends for Glenmark? If you look at the YTD charts, the stock has exhibited gains, but if you look at from the past couple of sessions, it has been oscillating about that 1850 to 1872.
Technically, this counter is into a very strong consolidation phase and at a very strong support zone. So I'm expecting that 1820, 1840 is should be acting as a very strong support levels. Although on the higher end, the momentum is still or yet to come because 1900 again plays a kind of a rejection level for the counter. So any breakthrough or any closer above 1900 can provide some kind of trigger for momentum in the counter, and from there onwards we can see a strong momentum in the coming period. So I'm expecting a bullish view only, but on after if it breaches the zone of 1900, and if it happens, then from there onwards we can see a move towards the zone of 2050 to 2070 on a short-term perspective.
Okay, that's the view coming in for the counter. That's your Glenmark Pharma. Let's take another stock in focus. That is your Craftsman Automation. Of course, the stock has been trading at about its near days high levels itself. With today's rally, the stock has already snapped its 3-day losing streak as well. We did see a block deal also taking place in the counter, and that's what buoyed the stock ahead as well. And for the second quarter, also the counter has posted a steady September quarter performance. But yes, Osho, how would you view this counter? I mean, the stock is at days high levels and the stock has been building quite a bit of gains.
This counter is looking very positive to me. I'm expecting that from here onwards, it has the potential to give a breakout above the zone of 7200, and from there onwards, 7750 will be the next target that one can expect in a short-term period. So it is having a very strong technical views and technical developments. It is advisable to stay invested, or one can start accumulating the at current levels also.
Okay, all right. One can start accumulating at the current levels. Right, we'll just see in a bit the last rates, which will come up on your screen of how the Nifty has closed as of now. Of course, for the majority part of the day, we did see that the Nifty had moved quite sideways. It was stuck in a range, but right now it did see that it has slipped below that 25,900 mark, which it was holding quite smartly throughout the day. But yes, a 0.3% cut coming in for the Nifty 50. Sensex also down by about 350 points. 0.4% cut coming in for Sensex as well. And if you look at the Nifty series for this particular November, has also been quite negative. It's been quite flattish for this particular November series itself for the benchmark index. If you look at the mid cap index, 0.3% gains coming in for there. On the other hand, if you look at the Bank Nifty index, it has closed negatively. I mean flat with a negative bias as of now. On the other hand, if you look at the broader end of the markets, they have outperformed in today's trading session. Mid caps showcasing gain of about 0.3%, small caps also showcasing a gain of about 0.2%. What did well? Definitely that was your PSU banks. Nifty PSU Bank up by about 1.4%. On the other hand, Nifty Realty also snapping its 5-day losing streak with about 1.5% gains. On the other hand, if you look at Nifty IT index, that seems to be sulking in trade. Some selling pressure which has crept up in the technology names. For instance, your TCS and Infosys, all of these have been sulking in the trade, and as a result of which Nifty IT index is seeing a decline of about 0.5% itself. On the other hand, apart from IT, auto stocks have also been, not doing well. 0.3% cut coming in for the Nifty Auto Index as well. On the other hand, if you look at Nifty FMCG, also showcasing a decline of about 0.3%. Nifty Metals, however, that has been holding well despite back-to-back losses that we saw. And of course, for the November series, Nifty Metals have been quite a laggard. But today, it has posted a gain of about 0.4%. Osho, coming back to you for Nifty Metals, of course, the November series has seen some bit of a profit booking for the metal counters given the kind of rally it has seen. Today, it has been quite flat, 0.4% gains. But how would you see the way forward going ahead?
The overall metal counters are into a kind of a corrective phase because the metal index has seen a breakdown from the zone of nearly 10,250 odd levels, and the kind of breakdown it has shown on the daily time frame chart on the lower end. I expect a target of nearly 99.50 on the daily time frame chart. So still there is some room on the downside, but overall majority of the counters have already cracked a bit from the higher end, and in couple of trading sessions they might see some kind of consolidation or a breather, and then onwards we can see some kind of buying traction returning back. But for next couple of trading session, it's better to stay sideways from these counters, and further correction is expected on the technical charts.
Okay, all right. All right, just one last question before we let you go, Osho. What is the kind of trading strategy that traders should adopt at this particular point of time, and what would be your topics?
Overall, I'm having the same approach of buying the dips because I'm expecting that any dips towards the zone of 25,750 should be auguring well for the buyers. The overall structure is very robust. So one should try to accumulate on the dips and not be aggressive on any kind of resurgence or any kind of move until we breach the zone of 26,150 on a decisive manner. For the stock picks, there are two counters which are looking very positive to me. The first one is Godrej Consumer. After very elongated period of profit booking and consolidation, Godrej consumers have started gaining traction. So I'm expecting that from here onwards, there is high potential for the counter to see a kind of a reversal. So 1200 will be the target that I'm expecting with Godrej CP, while 1110 is the advisable stop loss. The other counter which is looking positive is from the pharma pack. Lupin is looking very positive to me. It has reversed from the short-term moving average, and I'm expecting the momentum should be continued in Lupin. So one should try to accumulate position in Lupin with 1998 as a stop loss. And on the higher end, 2120 will be the target that one can expect in Lupin.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Osho. Thank you so much for your time and connecting with us.
Thank you so much.
All right. Of course, we did see that both the headline indices were consolidating in today's trading session, given that it's the last day and, of course, it's the monthly expiry day for the Nifty derivatives contract as well. But we did see that, in the late half of the trading session, in just the 30 minutes, the picture totally reversed, and we did see this sell-off emerged quite intensely because we did see that the Nifty slipped below that 25,900 mark, which it was holding quite well. and Sensex also tumbled by about 350 points itself. And among the November series of what did do well and what did not, it was the defense stocks, which also saw a little bit of a cool off. The shares of BAML, Midani, all of these saw a decline of about 14 to 15% in the November series itself. Defense stocks saw a cool off. Then that was followed by the Nifty Metal Index also. Nifty Metals also saw a bit of cool off right now for the month of the November series itself. On the other hand, if you look at majority of the other sectoral indices, be it your realty stocks, also saw a little bit of a cool off in the month of November series itself. But yes, despite the headline indices which were flat for the November series, it was your mid caps which held the fort, whereas the small cap index continues to sulk, and they saw a sharp dip for the November series itself. But yes, coming to the top gainers and losers, on the other hand, for today's trading session, we can see that Hindalco has topped up the charts, 2% gains coming in for the counter. On the back of course, it snapped its 2-day losing streak as well. Bharat Electronics also did well with about 1.5% gains. There was a pact with Francis Safran to build hammer surface air to surface missiles, and that's why Bharat Electronics also did well, 1.5% gains coming in for there. SBI also doing well, snapping its 3-day losing streak from the PSU banking pack as well. Shriram Finance also doing well. Bajaj Auto also seem to be doing well. Plans to enter the e-rickshaw segment in 200 cities. That's what the company has outlined, and that's why you could see some gains building into the counter as well. Other than that, HDFC Life and Dr. Reddy's also did well in today's trading session. However, on the way down, you can see Adani Enterprises down for the third consecutive day, given that the company has opened its 25,000 crore rupees of rights issue, and that's why you can see a drop of about 2% in today's trading session. Other than that, Tata Motors passenger vehicles also down for another day. Company will be dropped from the Sensex index constituents, which will be the rebalancing will be in the month of December. So as a result of which we can see a little bit of an underperformance which has crept in Tata Motors passenger vehicles. Trent also not doing well, 1.5% cut coming in there. Other than that, some of the IT stocks also took it to the chin. Infosys seeing a decline of about 1%. TCS also saw a bit of a profit booking in today's trading session. But to understand, how the market looks like for the long term and how you should build your portfolios, I'll go across to market expert Anshul Saigal, who will make us understand how the market sentiment looks like for the long-term trajectory. Anshul, good afternoon. We have fairly been a range-bound market, and every time we test that 26,000, we get tumbling down and then have been stuck in a range for quite some time now. So what is keeping the markets contained? What will be the next triggers that will drive some growth going ahead and, of course, bring some conviction back into the investor's mind?
Uh, Good afternoon. Pleasure to be with you. Yes, the markets have been challenging in this current year, mainly because, particularly in the first half, there has been weakness in earnings, as also the macro hasn't been favorable. We've had talk of tariffs, which has been adverse. We've had, global geopolitical situation, which has been weak. And to top it all, we've had valuations in our country which had no room for upside. Valuations had only room for downsides. Most of these things have played out. Valuations, both on a time basis as also on a price basis, have corrected. I think we should look beyond the Sensex and Nifty and look underneath those numbers to see how the markets have done. And if you look at some of the small and mid cap names, they have corrected quite meaningfully. And these are quality names which have corrected. On average, companies have corrected between 20 and 50%. So, both on a valuation basis as also on a time basis, there has been a correction. And then, if we see the most recent quarter, we see some inkling of hope because in this quarter, earnings have rebounded a little bit. And the commentary that markets have given, that companies have given, has also been quite strong. Take all of that together as also the positivity which is likely on macro. If tariffs were to come down, settle at where the rest of the world is, which is 15 and 20%, that again will be taken positively by the markets. And this makes a heady mix for the markets to move up going forward. So, in our judgment, most of the downside has played out. Risk reward looks reasonably favorable from here. And this is a time to build quality names in one's portfolios.
Okay. Anshul, you were talking about the small caps and mid caps as well. Of course, small caps, they have continued to see quarterly downgrades back to back. So, would you say that it is time for investors to cut some exposure in that space until there is some clear growth comfort visible?
Lovisha, actually, that it generally doesn't. I mean, how investors invest is that they look at recent trends on prices and they extrapolate that to the future. If gold has done well in the last 1.5 years, then they extrapolate that gold is likely to do well going forward. If stocks have done badly, then they extrapolate that to the future. Generally, in our judgment, what plays out is that value is where one should be. I mean, or value assessment is what decides how the future returns are going to be. And if something is worth 100, it has corrected to 60, 70, then value has emerged. And so the likelihood of future returns is greater than not. If something is valued at 100 and that has moved to 120, then likelihood of future returns eases off. And so that is what an investor should keep in mind. With that framework, and with small caps having corrected, also earnings seemingly reverting to higher levels. It looks like in the small caps, this is not a time to exit or trim your positions. In fact, this is a time to build quality small caps and also mid caps because going forward from here, returns should be definitely better than what we have seen in the last 1 odd year.
Okay. Anshul, now let's talk about some sector-specific moves. Of course, IT sector is back in focus, not just after the better than expected Q2 performance, but also because of AI services play which has been emerging in India. So, do you think as the heavy capex cycle moderates, services would pick pace and eventually it would benefit the Indian IT going ahead, or would you still wait out for until this entire narrative plays out?
Uh, Indian IT is in a bit of a rut in on many counts. One is, of course, the fact that these are services companies and AI can eat their lunch. The progression on AI is so fast and so significant. It is such a significant step that is happening in tech sector that this space can really lose market share to AI quite meaningfully. I mean, there is that sort of uncertainty on for the tech sector. Add to that the fact that a future growth for future growth, they need the U.S. Economy to fire because most of their business comes from there, or the global economy to fire because that's where they get most of their business. And there is uncertainty even on that count. And then if you look at valuations, it's not like even after the time correction, it's not like these companies are trading at really mouth-watering valuations. They're still at about 20, 25 times price to earnings. So I would be a little tepid on this name, but of course, I would be watching for any turnaround in signals because clearly there is that froth of ownership in this space is behind us, and so any positive development in this space could kind of spark interest in this space.
Okay. But from a risk reward perspective, do you believe that the risk reward ratio has turned favorable and investors who want to monetize on this early future growth trend is something that they can start accumulating at the current levels?
For sectors in general, yes. I mean, let's look at the GST development and prior to that, the tax cuts. If you add both of those things together and then you look at how consumption is likely to play out in future, it builds a positive sort of picture for consumption going forward. And then we must also keep in mind that post-COVID, in rural areas particularly, and tier 2, tier 3 cities, consumption had been very tepid because most households were building their reserves and they were not going out and consuming. In our judgment, with these developments on GST and tax cuts, as also time having passed, maybe good consumption levels are ahead of us, both in rural as also in urban areas. And that clearly is that kind of generates animal spirits in the economy. And that will also have a virtuous cycle to play going forward. So, in our judgment, risk reward looks reasonable at this time. And the general macro environment as also the micro developments. When I speak with companies, the kind of body language that I sense, it does look like this is a favorable risk reward situation.
Okay, okay. Anshul, how would you view the rupee volatility right now? Of course, there is a risk of unwinding trades, but what should investors watch out for going ahead?
While Lovisha, I'm not a rupee expert or a FX expert, but let me, on that count, just say that if we look at emerging markets in general, we've seen the markets doing very well. The stock markets in emerging markets in general do very well in the current year. But India has been just, in a contrasting situation. While Indian markets have really not done anywhere close to what the other emerging markets have done. Whether you look at China, you look at Taiwan, you look at Korea, even Brazil, and some of the other markets, they've done exceptionally well. And that has had a play on our currency as well. And currency has depreciated as a result. However, if we can make a case for global markets to stabilize and not give in going forward into the next year, in that scenario, we can make a good case, macro case for India to do well. And if that is the case, then it will have a ripple positive effect on currency as well. So that's really the sort of balance that we are in. And also progressively, India's current account deficit is becoming more and more favorable, which again should have a positive impact on currency. So in general, in my calculations, I build over the long term a 2 to 3% depreciation in currency. There will be years where depreciation will be more than that. Other years where depreciation will be less.
Hmm. Okay, okay. So, Anshul, would the export-oriented sectors are poised to benefit from this weakening rupee? Like we discussed about IT earlier, but what about pharma?
I mean, ideally, on in terms of cash flows, this should be positive for them. But markets see through that. Markets don't give multiples on 1 year of depreciation in currency. Markets want to see sustained growth, sustained cash flows, and uncertainties like tariffs and other pharma-related uncertainties are what the markets are going to take into consideration before giving multiples going forward. However, on the domestic front, Indian pharma continues to do very well, and that will be the balancing figure on growth for pharma companies. So by and large, pharma is a favorable sector. Near-term uncertainties, of course, because of tariffs, but long term, this is a space which should do very well for India.
Okay, okay. Anshul, let's also talk about the new labor codes that the centre has notified. It prescribes for higher provident fund limits, changes to gratuity. So, when it comes to infra segment, how do you see this cost increase impacting the profitability of the companies? And also, of course, what does these laws mean for platform companies also? Because now they're required to contribute at least 1 to 2% of their annual turnover towards this worker welfare.
Yeah, I saw some calculations, and for the platform companies, it did look like roughly per order impact of 2 to 3 rupees. Now that if that was to play out, it will of course mean that there will be a adverse impact on earnings. But I have not gone into much detail into the calculation. And also the stock prices didn't seem to suggest that there is too much of an adverse impact, which is likely. So we'll have to wait and see. Also, these companies have become so entrenched that passing on 2 or 3 rupees to the consumer should not be that difficult. So, in our judgment, not so much of an impact overall in the long term. It should be good for the workers for sure because they become more organized and their take homes become more certain for them. So good for them. And again, that will in turn have a ripple effect on consumption, positive effect. For infrastructure sector, again, adverse development clearly because of what you just said. But again, we'll have to wait and see how much of that impact they can pass on to the customer and how much they'll have to retain. That only time will tell. So, in general, what I've seen is that when there are demand tailwinds, then these small increases in cost are easily absorbed by the system, and those tailwinds take care of these cost increases. So we are, if we believe that infrastructure space has significant tailwind, if we believe that the gig workers that you spoke about have, in that space, there is substantial demand to come, then clearly this will not be so much of an issue. But if this were to play out when there is a general slowdown, then the impact will be material. I'm in the former camp rather than the latter camp.
Okay, okay, all right. All right, Anshul, just one last question before we let you go. I mean, we've discussed about, different market triggers as well. And now that the Q2 earnings season is also ended, what are you expecting the next trigger for the markets to be? I mean, is it going to be India-US trade deal, which is yet to materialize as of now? Where are we seeing, markets to move going ahead?
That will be a trigger for sure, a positive trigger. If that deal were to come in favorably for India, it will be definitely a strong trigger. I think that also speaking to some FIIs, what one gets a sense is that they are also concerned that India does not have an R&D or an AI play, not as much as China does. So greater spending on research and development, and also some sort of a projection of artificial intelligence play in India, those will also be positives, which the FIIs will take positively and look at India favorably going forward. So tariff deal and this one aspect, I think in conjunction with, of course, earnings trajectory turning favorably, I think these are some things which the markets will take positively. Also, as I mentioned, that valuations have over the last 1 year consolidated in the small and mid cap space, corrected, and that will also give some comfort to the investors, foreign investors into the country, because they were seeing India to be far ahead of other emerging markets in valuations. That premium has corrected.
Okay, okay. Okay, Anshul, with that we have to let you go. But thank you so much for your connecting with us and hoping that we meet you soon.
Thank you. It is my pleasure. Thanks for having me. Bye bye.
All right, that's all we have for this edition of Closing Bell. But yes, with that we have come to an end of this edition. And but before I let you go, let me introduce you once again to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself.